Good evening, everyone. Today is the 20th of April 20, Monday evening around 8:37 p.m. Thought of making a video on the ultimate rule of trading. Now, if you've been in the stock market directly or indirectly for some time, if you've read a bit about investments, trading, you would have come across this ultimate rule. It's not new, it's obvious. But most of the time, these obvious things are not obviously the obvious ones. So, what triggered me to make this video was one of a recent comment from our Honorable Prime Minister, who, amidst this epidemic, these difficult times, used a quote saying that "Jaan hai to jahan hai." This is the News 18 India website where I've got this write up. This is an 18th century old Urdu poet, Amir Taki, who had phrased this. Jaan hai to jahan hai. In English, if you want to figure it out, it essentially means that if you live, do you have the world ahead of you? Or as long as you have your life, will you be able to experience the world? Now, you don't need an epidemic. You don't need a very difficult time to make you realize this. Don't you think that everything that you have experienced in your life is only because you were alive? Right? So, Jaan hai to jahan hai means life comes first. And as long as the life keeps flickering, we will experience the world around us and ahead of us. Now, how come this term be connected with the ultimate rule of trading? Now, when I was reading this article, it kind of struck me that it's got a beautiful connection from a trader. Now, being a trader, being someone who's associated with the stock market for so many years, once a trader, always a trader, and a trader always thinks from the trading perspective. Everything. That's a sign of a typical trader. So, it happens with me also. And so I was thinking that Jaan hai to jahan hai. Jaan for a trader, if you ask me, is capital. That's your life. That's the money that you're utilizing, you're using, you're risking to make more capital, more money. So for a trader, for an investor, Jaan is capital. Life is capital. You can only trade if you have a capital, or else how will you trade? You can only enjoy the world around if you have a life. If you don't have a life, how will you enjoy the world around? So, Jaan is capital. And Jahan is your returns, profit and loss. So, if you have the Jaan, if you have the capital, with that capital, will you be able to experience the returns, the profits and loss that you can earn, that you can make from the stock market? So, as long as you have the capital, Jaan hai to jahan hai. As long as you have the capital, there is a chance of returns. So capital is ultimate. So something that you have always known or heard is preserve, protect your capital. Or as long as your capital is there with you, as long as it is there intact or little down, there is a chance for you to come back tomorrow and risk it and recover and make some more. Preserve your capital, protect your capital. As long as you have the capital, there is an important chance, there's a very high chance of you making returns, enjoying the world around. This by far is the ultimate rule of trading. Protect your capital. Of course, you would have read this. Of course, you would have heard this, but it's time you understand this. And I know this is the right time for you to understand, because until and unless you're shaken from your root, you won't listen, you will hear. So please listen, protect your capital. Now, why it is so important, if you allow me to extend this a little further. See, psychologically, when you go through a loss, you did a trade today and it was a loss. Now, psychologically, it's a little taxing in two different ways. One is the fact that you have gone wrong. You've gone wrong. See, going wrong immediately makes you feel bad, because you've gone wrong, right? The other effect of a loss making trade is the loss of money. So it's got a double whammy. Not only do I feel bad because I've gone wrong, damn, I've lost money also. So in trading or in investment, a loss making trade, the experience of when you book a loss, it's quite extreme. It's quite extreme. See, if you make a prediction that who's going to win the World Cup, and you say, okay, India is going to win the World Cup, and India does not make it, you feel bad because you wanted, you thought, you predicted, and you went wrong in front of your friends and family. So you will feel bad, but you did not lose money. Over here, not only did your trade hit your stop loss, you anticipate it will go up and it came down. That's got a bad feeling attached to it. But I went wrong and I lost money. So the double whammy of it makes the experience, I would say, a little extreme. Now it completely depends on trader to trader, person to person, your approach, your acceptability towards this extreme feeling. Now I'll tell you very typical outcome. Because this extreme feeling is essentially negative in nature, will you ever want to repeat a negative feeling? You put your finger in a fire, you know it's hot, it can burn you. Will you do that again? Of course, no. So, biologically, automatically, you would subconsciously, you would want to stay away from that negative feeling that you experienced due to a loss making trade. So, will you look up tomorrow? Come on, let's do that again tomorrow. No, right? Maybe consciously you want to recover your loss. Maybe consciously you want to because you like the thrill of trading. But subconsciously, that negative feeling is something that you do not want to experience again. And this is why you will see many people, when they go through a loss making phase, they completely go away from the stock market. Maybe for a day or a week or a month or a year, and then they come back again when everything goes well, and they pull, the market essentially pulls you inside back. They're impulsive. I think impulse is a better word. That's not a sign of a trader. That you will only enjoy when the sun is up and you get beaten down and you, oh, this is too bad, I'm not going to trade here, I'm going to stay away, this is not for me, this is only for the rich people. Essentially, when you say things like that, the fundamentals have gone bad, the technicals don't work, it is only these guys who have skewed the market. When you say this, it means that you couldn't do it. You are shying away from taking another loss. But when you trade, every day is a fight, and every fight can lead to big profits or big losses. And you can only fight the next day. It's only possible to fight the next day as long as you have your life, as long as you have your jaan, as long as you have your capital. So please focus on this. Don't focus on how much returns did I make. As long as you live, you might experience Switzerland, you might experience Kashmir, or you might experience hell or heaven. So don't focus on what's coming your way, just focus on the capital part. Now, easier said than done. It took me 16 years to make this kind of videos. Trust me, I couldn't have made this in the first year, second year, or fifth year of my career. When you're starting off, a beginner, it's not easy. You know why it's not easy? Because you start with 100 rupees, and the very first trade, if it dips down a little bit and you're at 98, you get a little shaken. So for a beginner, you need to be very, very cautious. As you scale up, as you become a little intermediate, a little advanced, and your 100 has over the period of time, let's say, gone to 120 or 130. Now, even if you come down to 118, you're still above 100, so you're still all right. So please, when you start trading, yes, you have big dreams and big goals and ambitions. I understand. That only will come later. Please protect your capital at the beginning. And I always suggest a simple 5-pointer rule. Number 1, you should always know which stock to buy or sell, or which index or which stock to buy or sell. Essentially, I'm saying that you should do your homework. Number 2, at what price to enter. This is your point of entry. Your point of exit. At what price to exit. And fourth, also at what price to exit. The only difference between point number 3 and point number 4 is this one, what point to exit in a profit and what point to exit in a loss. So the fifth one is the quantity. Now remember very carefully, if you want to take away one thing from this video of mine today evening, it is this part. If you answer these 5 questions to yourself before you take a trade, not after, before you take a trade, trading will not be stressful. Why? You have decided, you know which stock you want to focus upon. So you're not scouting the market for some trading opportunities. You've done that homework. Once you've done that homework, you know at what price you're going to enter. So you're quite clear about it. You're quite clear that how much profit you can make from the stock. So you have a preconceived understanding. If it goes completely against you, your subconscious mind have already accepted a loss amount. So when it becomes a reality, when the subconscious notional loss becomes a conscious real loss, your mind has already thought about it. So it's not going to be very difficult. And finally, the bet size, how much quantity you're going to bet on it. If you answer these 5 questions before you take a trade, trading will not be that difficult. Essentially, what I'm suggesting here is nothing but money management or risk management. It's very, very important. It's very, very important. The second most important after psychology. See, essentially, this video is all about the psyche, right? Preservation of capital and etc. etc. Understanding this, appreciating this, and then executing that is money management. I had created an Excel sheet on money management few months or a year back. I'll leave the link on the description box. It's there in my YouTube channel. Watch that, understand it, and you can download the sheet, use it. And remember that the most of the successful traders who are real traders, you'll find them, most of them would have a lot of gray hair. So it has taken them time. If you look at the curve of Mr. Warren Buffett's growth of capital, it will only see an exponential growth after he turned, I think, 50 or 55 or little more than that. So trust me, there's no hurry. but it's very important we all get our foundations strong, because if the foundations are strong and you're in a hurry to make the first floor to the 10th floor, it's gonna come down. All right, so I thought that I'll utilize this evening with this quick video. As long as we have our life, we will be able to experience the world around us. As long as we have our capital as a trader, we will be able to experience the profits and losses which we are going to try and make tomorrow. Thank you for watching my videos. Do share your suggestions and feedback. They always push me, inspire and motivate me to create these kind of drop of a hat kind of videos, which just happens to happen. I hope you liked it. Till then, please take care of yourselves and trade well, trade wise.